Hello, we are live. Come on in, y'all. Hope you're having lunch. Join us. I do not own the rights to this music. This is Nipsey Hustle Dedication. I don't own the rights to this music. Facebook.
I like this song.
How long should I stay dedicated? How long till opportunity need preparation? I need some real nigga reparations. Or run up in your bank just for recreation. Dedication, hard work, plus patience. Some more of my sacrifice, I'm done waiting. Done waiting, told you that I wasn't playing. Now you hear what I've been saying. Dedication.
Come on in, y'all. I'm just trying to share this to some groups. My phone is acting up.
I spent my whole life thinking out the box. Box at home is 3-on-1. Got DP, but I ain't dropped. Trip on me, here I come. Spin up on the block. They broke on me. Said I ran a stop sign, but that's a lie. I spent my whole life staring at the stage, playing safe, but daddy smoking shirt. Mama playing spades, get your papers. Grandma said I get some Jordans for my grades. That's my baby. When she died, my heart broke 100 ways. I spent my whole life trying to make it, trying to chase it. The cycle of a black man divide, trying to break it. You take a loss, shit, don't cry about it. Just embrace it. Mind a setback for nature come back. That's my favorite. My nigga L said you do it somewhere next. Can't I hear a better clip? I said here, minute first, you hear the words out of his lips. I'm flourishing from the streets to black businesses. Level 4, y'all living, giving to false imprisonment. It's a close, my nigga. It's bigger than deuces and close, my nigga. Since elementary, we close, my nigga. Get straight like that. I give you the game, go back to the turf and give it right back. For generations, we been dealt bad hands for bad plans. Prove your dedication by hopping out grand hands. You met the premier politicking with top nips and Snoop. Damn, clock watching the way we do dedication.
All right, we are getting started, guys. Welcome, welcome, welcome. All right. Welcome, welcome. It's me, Sandra Fenwick, your mortgage consultant. I am here with Mr. Craig Adams. He is a agent for State Farm, and we are talking about the importance of having insurance when it comes to home ownership and everything else that you have in your life that you need to be insured. So I asked Craig to come on because, of course, you know, the theme of this show is to educate people who are just a little ignorant to the process. And most of us are because we wasn't taught a lot of this growing up. So this is where we come in, the professionals. And Craig is amazing. He's very passionate about what he does. So I said, I need to bring you on so you can talk to the people. Craig, go ahead and introduce yourself.
Hello, everybody. I'm Craig Adams. I'm a State Farm agent here in College Park, Maryland. My office right outside is raining outside. I'm on the beautiful campus of the University of Maryland on Baltimore Avenue, 7338 Baltimore Avenue, Suite 208. I want to thank Sandra Fenwick, who's a mortgage consultant, for inviting me here. And the reason why I'm here is I'm here to educate people. That's my passion. That is my passion. Education is my passion. Promoting generational wealth throughout my community is my passion. Providing a legacy for my family, helping people within our community, helping them with that. That's my passion. So that's why I work in this industry, and that's why I'm here today. That's why I do this. Like I said, I try to get away from my normal 9 to 5. And when I get to sit in these type of forums, you use the word, Sandra. I don't want to say I'm glad you used it, but you used the hot word. And I want to just elaborate on that. You use the word ignorant, right? And I think a lot of people, not just our people, but I just think a lot of people, that word is kind of sort of like, they don't want it to apply to themselves, right? But what I'm trying to say, the point I'm trying to make is I think it's okay. Because if you've never owned a home, like there's tons of things I don't know about, right? There's tons of stuff I don't know about. And it's okay. So you'll have people who've never bought a home before, but for myself and my position, like it's okay if you never bought a house. So when it comes to the homeowners insurance piece, when I'm trying to educate people, when I catch pushback, especially from the people who've never been in this position before, I kind of tie it to what you just said. So that's why I wanted to highlight that word that you just mentioned, because I just think a lot of people, they get caught and they're just like, and to tell the truth, Sandra, nobody wants to feel like they don't know something, right?
Right.
Like,
Yeah.
yeah, because it can be sort of embarrassing sometimes.
Yeah.
And I think us as people, I just think it's natural. I just think it's a normal human like emotion. It's like, oh, I don't know. And it's like, I think a lot of times people don't want to just sit back and like, I don't, not all people are like that. But I just think sometimes that can be the hardest part of my job.
Yeah.
That I know.
Yeah, and I say ignorant. Ignorant just means you don't know. It's not a bad word. It's not me putting you down. I'm ignorant to a whole lot of things. I just don't know. So the reason why, when I don't know, I ask the professionals. I ask people who have experience. I get a mentor. I seek out people who have the knowledge so I can learn. And that's what we have to do as a people. I had a conversation with a friend earlier, and we as a people, we just don't come together. We don't work together. We don't ask the hard questions because we don't want to be deemed as ignorant. But ignorant is not a bad thing. It's just that we don't know. So here we are. Let's give you the info, the 411. Now, we discussed earlier that we were telling people, like, people don't understand when I'm putting together their numbers for their loan, you have to have mortgage insurance and homeowner insurance, or they call it in our business hazard insurance. So I was asking you to kind of explain the difference between the two and kind of what you offer.
Okay, good. Let's start there. So mortgage insurance. All right. Mortgage insurance and hazard insurance. I'm so glad I'm on this call with a loan officer, because when I'm doing my presentations, I talk about it a little bit and they'll be like, what is the difference between the two? And I'm like, okay. And then we get into force-based insurance. So like, now this are a forum right here. So you can kind of sort of like be my my fact checker.
Yeah.
You can be my fact checker.
Yeah.
So hazard insurance. Let's start with me. Hazard insurance. First off and foremost, like I tell people in my classes, you have to have it. Your customer doesn't have a choice. Sandra, I studied. I think it developed in like the 30s. I researched this at one point when they put together the mortgage industry and the insurance industry when it merged. I think it was like in around the early 30s. You know this, but when your customers buy a house, that house, unless they pay it for cash, if it's not paid with cash, there's a loan on that house. It's financed. The bank, the mortgage company, has a vested interest until that home is rightfully in possession of the owner. So it has to be paid off entirely. Until then, ownership is still pretty much deemed by the bank or the mortgage company. They still have a part in that. So to protect their interests, they're going to require their customer to have homeowners insurance in the case that home is damaged, destroyed, there's a fire, there's water damage, vandalism, etc. They want to make sure whether or not your customer lives there or not, that home is rebuilt. That's what I always tell people in my classes. Now, I'm going to push the envelope a little bit further. That is the reason why you have to have hazard insurance. Mortgage insurance protects, correct me on this, I'm not a loan officer, protects your loan, correct? If they
mortgage
default,
insurance, yes.
If they default on their loan.
Mm-hmm.
And what a lot of your customers will do is they'll get mixed up and they'll say, okay, well, my loan officer was mentioning mortgage insurance. No, that's just in the event that for whatever reason you default on your loan, you can't pay that company. There's a policy or there's coverage in place to protect that. That is it. You can further elaborate on that.
Yeah, that's what it's about. Mortgage insurance was brought up because they wanted to make home ownership more attainable for everybody, everyday folk. Because at first you had to put 20% down on your house and that was it. They didn't require mortgage insurance because if you default, they got 20% equity. So they just take your house and they keep that money. Now they're allowing you to buy a home with 3.5% down, 3% down. So they're saying in lieu of you putting down 20%, we're going to charge you mortgage insurance. So each of the different loans have a different type. So if you go with the conventional loan, you're going to get a private mortgage insurance. So you will go with a company similar to yours, and they'll provide your mortgage insurance. Or if you go with FHA, the HUD provides your mortgage insurance. So you're paying FHA every month to insure your loan. If you go with USDA, VA, they all have their own insurance. So VA, of course, is free. The Veteran Administration insures the loan for the veterans. But USDA, you do pay a small premium. So that's what that's for. It's just if you default on your payments, the bank get paid whatever they invested in you. So, and if you put down 20% on conventional loan, you don't have to pay mortgage insurance.
You don't have it. So that's good. So you just taught me something. Once you hit your 20%, you don't need PMI, right?
That's only on conventional loans. All of the government loans, that's for the life of the loan. You have to refinance into a conventional loan to lose your PMI.
Okay, so if you don't have a conventional loan, you'll have it on the life of the loan.
Yep, FHA.
Really? I didn't know that.
Yeah.
Okay, see, I didn't know that.
Mm-hmm.
Okay, see, that's why I'm glad you're on the call.
Yeah, see, that's what we're here for.
I'm ignorant too. That's what I'm trying to tell people. I don't know all this stuff.
Mm-hmm.
Some customers will ask me loan questions, and I'm like, I'm not a loan officer, but some things I do know, and I'll tell them, but I'm not refer back to your loan officer.
Right.
We don't know everything. Let's push the envelope though. Let's talk about more. Let's talk about forced place insurance. Let's talk about that.
Okay.
Now you get your homeowners insurance in place, right? You got the PMI, got your homeowners insurance in place. Move into the house, everything's good. Year goes by, 2 years goes by. Something unforeseen happens. Let's just say for whatever reason, customers not going through escrow, they fall behind on their mortgage payments. On their mortgage payments and their homeowners insurance.
Mm-hmm.
I don't like this term. There is a term in insurance called forced placed insurance for when your customer does not pay their premiums. Mortgage company does not like that.
Mm-hmm.
If they find out, and they do,
right.
They find out. They find out because 9 times out of 10, when they go through escrow, the mortgage company is making the payment. So customer's not even seeing the bill.
Right.
It's going straight to the mortgage company. They're making the payment on their behalf. That's that. We send proof of insurance. Hey, the policy's in place. Yes. Okay. Let's go for another year. They find out that policy has not been paid. They will select. I think they give you a chain. They'll give you maybe like 30 days. After that, they're like, insurance is going on that house.
Yes.
Forced placed insurance does not protect the customer's interest. It only protects the bank. That is it. Okay. I talk about it when I go through my home buying classes. A standard policy. You got dwelling coverage. I go through all these too. You got dwelling coverage. You got personal property coverage. You got other structures coverage, which covers the other property that you may own on your home. You have liability coverage if someone tries to sue you. Medical payments if that person is hurt while they're on your property and they have to go to the emergency room, your policy will pay for that. And you have loss of use coverage. That is in the event you can't stay in your house, the insurance company will put you up somewhere to live until you can go back in the house. Out of all those coverages, I just mentioned 6 coverages, Sandra. Out of all those coverages I mentioned, okay, out of 6, forced placed insurance only covers 1 coverage. The house. That is it.
Wow.
That is it. And it gets worse. The policy will most likely be 2 or 3 times more than when you can get in the private market.
Wow.
So if someone's paying, simple math, so if someone's paying $100 a month, $1,200 a year for their policy, through a standard company like State Farm, Allstate, etc., if they have to get forced placed insurance, that policy could be $2,800.
Wow.
$2,800. I've seen it, and the worst part about it is not only does it not cover those other coverages that will help you in the event you have a claim or a loss. Not only is the price going to increase, they're going to roll that new price into your mortgage payment. Your mortgage payment is going to go up.
Wow.
You don't want that. Your customers don't want that.
Right.
They don't want that. They don't want that. That's why loan officers like you, other loan officers, refer their customers to people like me and the companies like ours.
Yes.
Because it's going to be cheaper. You're going to have better coverage, and it's a win-win across the board.
Yes. Yes. So yeah, that's what we always recommend escrow. So just go ahead and escrow your payment so you can make sure that it's going to get paid every month.
Correct.
But people are more and more waiving escrows and they're saying, oh, I'll pay it myself. So if they decide to do that and they forget or something happens and they do get this forced place insurance, how soon can they get out of that? Or is it a mandatory?
Yeah, that's a good question. That's actually a good question. What I always say is because it happens, like they'll get the letter, right? They'll get the letter. Hey, you got 30 days. You don't get a policy and show us a policy and send us a declaration page, and in a paid invoice that it was paid, we're slapping this forced place insurance on you in 30 days.
Okay.
What I've seen 9 times out of 10, once that customer gets a policy and we inform the mortgage company, they'll remove the other policy. They'll give you a break. Yeah, they know. They know it's not in your best interest. It's not in the customer's best interest. Gotcha. So I don't think they'll like hold them. Hey, you didn't pay it. You're gonna have to stay with this company. I haven't seen any stories like that. 9 times out of 10, when people call us, they've already gotten that letter. Yeah, okay. I have people who come in there like, look, man, I need some coverage, and I'm like, okay, what do you like, man? If I don't get it, my insurance is going to $3,200, and I'm like, okay, let's take care of this now. Yeah, forced place insurance is expensive.
Yeah, that's almost similar to that Maryland state insurance, like for your car insurance.
Maybe.
You don't have it. Yeah.
I mean, that's actually a good example. I don't really like to murky the water, and I'll tell you why. We can talk about that. Gotcha. I don't normally like to murky the waters when we talk about car insurance and home insurance, but because I know most people, they have that familiarity. I stutter. Just make it. They're familiar with car insurance, and that's what they know. Because me and you talked about the ignorance thing, right?
Yes.
They may not have ever bought a house before, but they probably had a car.
Yes.
So because they had that car, they're like, well, I had insurance before, so how different could? That's what they say to me. Well, how difficult could it be? I had it. Well, it's not the same.
Right. Okay,
It's not the same.
Yeah.
You're talking about your house. You're talking about your car, right? They're not the same. Every insurance company is not the same.
Right.
People think insurance. Okay, well, I go to that flower shop down the street. I go to that flower shop. I'm gonna get a rose. The rose looks alike, so I'm gonna get this. They're not the same. Insurance companies don't pay out the same.
Wow. Okay.
There are some insurance companies. I just found this out. How would you like it? How would you like it if you got a house and you buy an insurance policy and you have a claim and you have a water claim and your insurance company covers you for a water claim, but then you go to another insurance company and the insurance company doesn't cover for water backup claims. There's some companies that don't do that. Not all of them.
Yeah.
But some of them don't do that. You guys don't know that.
Right.
Yeah, you guys don't know that. You know what we hear, Sandra? You know what we hear? How much is my policy?
Exactly. How much is it? Yeah, that is so true. And we don't hear. I mean, not everyone, but typically we don't hear. Does it cover? Does it cover? Does it cover? Does it cover this? Does it cover that? It's like I said, some people are. Everybody's different, right? We're being real broad here, right. But for the most part, 9 times out of 10, most people are price driven. Yeah. I'm price driven. I like buying nice, expensive stuff for not a lot of money. Like I get off on that. I love buying something real nice and being like, y'all pay X amount of money for it. I didn't. That's just what I like. Now just cheap. I'm not cheap. Right. Okay.
I'm not cheap. Yeah, I'm not cheap. I like nice stuff. I just don't like to pay a lot of money for it. But I'm not cheap.
Okay.
You ever heard that saying, you get what you pay for?
Yes.
You got to be careful with that sometimes. And what I do is all my customers, especially if you refer someone to me, all my customers, I make sure the people who work for me, when we have a customer that's buying a house, I make sure you know what you're buying. You got to know what you're buying from me, especially if you're buying a house. You need to know what you're buying because, like, you may buy a policy. These people, I got people who've been with State Farm for 20, 30 years. They've never had a claim before. They never even looked at their policy. It's like, it's okay, I get it. And then they have a claim and it's like, they don't know. Like, we have lives going on.
Right.
So I make sure, you're going to probably get this and put it in a box somewhere and probably not even look at it for 4 years and then call me and want me to break everything down. That's my job. So I don't have a problem with that. But at the end of the day, when you go to purchase this, I need you to know what you're buying. So I go through everything line by line. I go through the entire thing, whether or not you want to hear me talk or not.
Right.
I tell them, I'm going to run my mouth for the next 5 or 10 minutes. I'm going to go through every coverage.
Yes.
You tell me if you have any questions. And if you do, we're going to talk all this out. I want you to be comfortable when you tell me you want this policy, you want to move forward, you have no questions. The biggest compliment I can get when I'm done with that is, Craig, I'm like, you explained everything to me. I'm like, nope, tell me something. There's nothing that you need to ask me. No coverage, no example I gave you.
Right.
Talk to me. So that's my process.
Okay. So we have a comment that I want to answer. So it says, thank you for the information. I saw this morning that the Wall Street Journal stated that the average rate for a 30-year mortgage just topped 4% for the first time since 2019. What does that mean for home buyers going forward? Now, I'm going to explain interest rates. Interest rates are just that. They go up, they go down. After the pandemic hit, the interest rates fell to an all-time low. That wasn't normal. 4% is normal, but when we had those lower rates, that was abnormal. That was because the government was trying to keep the economy going. They were still trying to stimulate and try to push people to refinance and get these loans. So the mortgage industry really fuels this economy. So you have Fannie Mae, you have Freddie Mac, you have Ginnie Mae. All of those are government-sponsored entities. So there's GSEs, and they take these loans and they trade them on the back market, right? And the interest rate is fueled from that. So and money is fueled from that. So if they were to, when people hit a pandemic and people didn't have money and people was afraid and they was holding on tight to everything, and if people would have stopped buying homes, stopped getting loans, stopped refinancing, our economy would have been hit. So they made a plan to lower the rate so the economy can keep going. So now that they gave out trillions of dollars and all types of stimulus packages and stuff, we got to recoup that money. What do you think that money got to be paid back? So now there's these Fed rate hikes coming, and it just is the country that we live in. There is no way around that, So because the interest rate is going to drive a slightly higher payment, we got Craig over here. Craig, my payment going up a little bit. It's going to be a little bit high. I need my coverage, but what can you do to make my insurance affordable? What can we do? What are our options for that?
Okay, good question. So okay, my payments are going up. I want to address my homeowners insurance. That's actually a good question. Taxes may be going up. I want to back up a little bit though, because I want to address this, because I want to tie it in. I want to tie your question in to a situation that I'm dealing with, and I want to put it together, right? So what I would do is, for that individual, I would say, okay, first off, let me give you an insurance review. Let me see how we can cost save for you. All right. That's the first thing I'm going to do.
Gotcha.
Best way, number one, to do that is to maximize your savings is by adding a discount. Car and homeowners insurance. That's your biggest discount right off the top. You're probably looking at anywhere from 20 to 30%, right? I think it's 20. I've seen a typical home, $300,000, not that you purchased, that you insured a house for. So that's not the purchase price. $300,000. That person's probably looking at, probably $1,200 a year, between $1,000, $1,200 a year. So if that same individual added the auto home discount, that person would probably save anywhere from $300 to $400 a year, just right there. Nice. So they're gonna go from $1,200, right, to between $800 to $900. Let's say $850, okay, for argument's sake. That's number one, $850. So okay, I add my car. That's number one. I'm gonna give you some more discounts. Best discounts I always tell people: your customers that purchase a brand new construction, a new build. I love those people.
Yes.
Those people get the biggest discounts
Okay.
right off the top. You get a person that's gonna buy a brand new house, new build, because they got an energy efficient home.
Yeah.
It's just it's just because that builder is gonna build up a house that was built in 2022 and no standards for the building up the home.
Mm-hmm.
The insurance company is gonna rate that home more favorable than these older model homes because it's gonna be up to like a code of 2022. Right? And it's going to be energy efficient, the materials that they're going to use. So that same, $1,200, remember how I used that $1,200 for that home? That new build, it's not going to be $1,200.
Ah.
I'm talking about without the auto home discount, Sandra. It'll probably be, I've seen 700, 750,
Wow.
800. Oh yeah, I love new builds.
Yeah.
Oh, by far.
And I guess, is it the discount because the likelihood of things just breaking down that have to be covered is lower?
Things breaking down. A lot of it has to do with the materials that they use to build the house, and it just being energy efficient. Right. Energy efficient is big, like your utility, your utilities, plumbing, HVAC. The insurance company's like, we ain't gonna have no problems with that.
Right.
Electrical, plumbing, roof, heating. The insurance company like, it's brand new. Right. That stuff's supposed to last for the next 20, 30 years.
Right.
They shouldn't be calling us for that.
Gotcha.
So therefore, why are we going to charge that person who's getting a brand new house as opposed to somebody that bought a house that was built in 1960?
Right. Makes sense.
See? So that person's not going to pay the same amount. Gotcha. So those are your biggest discounts. I'll give you some more discounts. If you have a alarm system, the Ring, the alarm system, ADT, sprinklers in your home. Remember I told you that's another bonus. Remember I told you about the new build homes? A lot of your new build homes, a lot of your townhomes have sprinklers in them.
Yes.
That's a discount.
Okay.
It's another discount.
Nice.
So a lot of these things are going to offset that cost going forward. But we always try to find ways, at least I do as an agent, we always try to find ways. Because I'm proud to say I work for a company because I know the industry, I know my competitors, and I used to work for Nationwide and Liberty Mutual. I'm proud to say my company, we give our customers the right every year. Your policy will increase; it does go up. I like to tell people that right off the bat. Your insurance goes up to protect you because inflation goes up and everything else goes up, like gas and food.
Yes.
And I don't understand why society doesn't think insurance should be the only exception to the rule, but everything else is going up too, right?
Right.
You got to rebuild your house. It's going to cost your house more to rebuild 5 years from now than it is today. So It has to go up.
Gotcha.
So as a result to that, to offset those costs as they're going up, those discounts can bring it back down.
Gotcha.
You don't have a claim. A lot of people don't know that. With State Farm, you don't have a claim. We reward you for that.
Okay.
You haven't been with us. You've been with us 15 years. You never had a claim. We like that.
Gotcha.
So as the cost goes up, you will be offset by not having any claims. So they kind of, you know what I mean? That's what I try to say. Yeah. So I always try to tell people, you paying $1,000 today. Next year it might be $1,200. It might be $1,250. Yeah. Now it's gonna go up. Now it's not gonna go up unless it's not gonna go up to $2,500, right? But it might go up to $1,200, $1,300. Now those other discounts are gonna start to kind of sort of level you off a little bit.
Gotcha.
So instead of going up to $1,500, $1,600, $1,700, those other discounts will kick in and kind of sort of keep you $1,200, $1,300. You understand what I'm saying?
Yes.
So it'll kind of sort of keep you within a certain parameter. And then, like I said, 5, 6 years later, let's just say hypothetically speaking, and I've probably done this 3 or 4 times in the last month. I got a customer and they're like, I had a customer in Potomac, and I think her replacement cost was like over $1 million. And she's like, I don't think it cost my house $1 million to rebuild. And I'm like, okay, let's just rerun the estimated replacement cost. You know what that means. What it costs to insure the home, and we hire a contractor to come out and repair the home if it's damaged.
Gotcha.
That's the replacement cost.
Mhm.
State Farm allows us to rerun that every year for the customer to make sure we're pricing you correctly.
Right.
We don't want to overcharge you. We don't
Yeah.
want to. So to do that, we can do that.
Mhm.
Other carriers don't do that.
Right.
We
Yeah.
do to make sure we're pricing you right. So think
Right.
about that. Think
Yeah.
about that. That's big.
So that we getting closer to the end real quick. Claims. Like for me, I learned the hard way. If you got something small that you can fix yourself, don't call the insurance company. Because I know some insurance companies cap how many claims you can make, and sometimes they'll drop you. And I've heard that in the past. What advice would you give people for that?
Now you do know this is my biggest topic.
Yeah. I didn't know.
I hope you do know that now.
Okay.
When I do claims is like, man, people ask me claim questions all the time. Okay, so right off the bat, this is the first thing I always say. I want all your viewers to know this.
Mhm.
If you have this is in Maryland, okay, DC 2 in Virginia for all I know. If you have 2 or more non-weather related claims in a 3-year period, everybody listen.
Mhm.
2 or more claims, non-weather related, in a 3-year period. State Farm, Allstate, Travelers, Erie, Farmers, and every company you can think of will drop you.
Wow.
So like you just said,
Mhm.
if you can pay a claim out of pocket,
Mhm.
right? It is in your best interest because of what I just said. It has nothing to do with money, you guys.
Right.
All right, I need your viewers and everybody to start. I know when people think of insurance, they just think of money. I used to be the same way. All right, before I got an insurance company. I get it. But you got to get away from that. All right. You call the insurance company, you have to remember that. Sandra, it's not a State Farm plug. State Farm does not jack up your rates if you make a claim.
Wow.
State Farm doesn't do that.
That's awesome.
Other companies do. Depending on how much you make a claim for, if it's 150 grand, 200 grand, depending on how much coverage you got, they may tell you to hit the road after one claim.
Wow.
Some carriers. I've seen it. I've seen it. I'm not gonna say who, but I've seen it.
Yeah.
Right? So you got to be cautious in that. So what I always try to tell people, I'm gonna give you 2 examples, and I do this in my classes. I always try to tell people I give 2 examples. I give an example of a big claim and a small claim, like you just said. So you get it. So I'll give it to your viewers.
Mhm.
Prime example. You got a water claim, it's $30,000, pipe bursts in your home, you got a $2,000 deductible. Auto claim, you got $2,000 deductible, you have to pay the insurance company or a body shop $2,000 to get your car back.
Wow.
Homeowners insurance does not work like that. That's
Gotcha.
why I always have to tell people this is not car insurance. We're
Gotcha.
talking about your house that you live in, okay? It doesn't respond the same way. No, you probably have 5 cars. I don't care. Talking about your house. It doesn't respond the same way. You have a $30,000 claim and a $2,000 deductible on your home. The insurance company is going to send you a check for $28,000. That's how your $2,000 deductible will be satisfied. They will say, go ahead and hire a contractor. Go hire whoever you want. You got $28,000.
Okay. That's
okay.
good.
Go hire somebody. That's how it's settled. That's a big claim.
Yes.
The example of a small claim, now I'm coming down your road because this is what you said you would do, and this is what I would do, and I advise all my customers when it falls below their deductible. Somebody tries to break in your house. You got a $2,000 deductible. They break windows. They mess up a few things like the door. They don't take anything. You call a repairman. He tells you it's going to be $1,700 to repair. You got a $2,000 deductible. It's less than your deductible. You're not going to get anything back.
Right.
Doesn't make any sense. Okay.
Right.
Let's say it was $2,700. Let's say it was $2,700. You got $2,000 deductible. You gonna get $700 back.
Right.
They're gonna say, Miss Fenwick, here's $700. Are you gonna file that claim still, Miss Fenwick?
No.
Tell me why. I
Because
ask everybody this to know.
it's not worth having the ding on my insurance. It's not worth my insurance going up. It's not worth me getting dropped for something that's $700.
You just hit it right on the head. You don't want to have a ding because now you got to go another 3 years. You have no idea what's going to happen.
Yeah.
You have no clue. It's not worth it, right? I got a $2,800 deductible on my house right now. I am not calling State Farm.
Right.
If I gotta fix my roof and it's $3,000,
Yeah.
I ain't calling them if it's $4,000 or $5,000. I'm not calling them.
Yeah.
I'm not calling them. Now, if it's probably 7,000 or 8,000, I'm calling them.
Right. That makes sense.
Probably 7, 8 or more. Oh, I'm calling them.
Yes.
Anything that's 3, 4. I'm actually going to raise my deductible because the higher your deductible, the lower your premium. I know I'm not calling State Farm.
Right.
I know
Gotcha.
that.
Yes.
So that is what I always try to explain to people. It's not really so much I'm not going to get any money back. You have to be careful because I especially if you're not, like I said, I gave the State Farm plug. When you file one claim, these other carriers jack up your insurance.
Right.
Your insurance is going up.
Yeah.
Okay.
Yes.
Your mortgage payment might go up. So it's not just that I don't file a claim because my insurance. Well, you want to have 3 feet of water in your house. You got $10,000 to repair it. You got to repair it. You got to do what you got to do.
Exactly.
So I never advise people not to file claims. I never have. I never will. But I always put the ball in their court. I have to do what's in the best interest of the customer and State Farm. That's what I have to do as an agent. All right. Here are your options. These are your choices. This is what's going to happen as a result of what you choose. The choice is yours.
Yes. Wow. So we have to do this again because I have so many questions. So many questions. One guy was telling me, this was years ago, when you get insurance on your home, wait for a day that everything is good and clean and you've done all your laundry and everything's stacked, and go through and do a video of everything in your house. And that helps the claims adjusters verify what you're filing on your claim.
That's a good point. That's a good point. I'm actually going to start telling people that, because people ask me, they go, well, I got stuff in my, and I would say take a picture, but I actually like what you just said better. I like that better.
Yeah.
That y'all just take your phone, just go around your house,
Right.
video everything.
Yes.
If you have any issues, you have record of it right there.
Right.
I like that.
Yeah.
I like that.
So that's one thing to keep our clients. Now, if you guys need insurance, Craig does it all. We talked about, and I know we over our 30 minutes, but the life insurance piece, like if something was to happen to you, you offer that type of coverage?
Yes, I do. And that's a good point. That's really big. And myself, I have it. My wife, I have it on her as well. And what I always try to recommend people after they get a policy from me, I tell every single one of them, you're doing everything you're doing to buy a house. Right now, it's the seller's market, COVID. People are doing everything they can to buy a house right now. Do everything you can to keep a house. You asked me why I do this, and I told you it's my passion. It's my passion. I want helping our community, building a legacy. Homeownership is the first way to do that. So if you're going to do that and purchase a home, won't you do everything in your power to keep your house? Allow me to put a policy on you, your spouse, whoever is making that payment. If something happens to you, if you can't go to work, people get illnesses, we can put a mortgage disability policy on you to pay your monthly mortgage in the event you don't go to work. You can't work. If that person passes away prematurely, if you have children, if you have a spouse, 2 people are paying the mortgage, now they can use that same policy, pay off all the mortgage, pay off a part of the mortgage. Now your investment doesn't go down the drain. So I've been doing this since 2007. I've heard every excuse in the book. I heard them all. All right. Nobody did anything for me. I don't care. I'm not going to be here. Bury me out back. I've heard them all. If you buy a house and you pay a mortgage for 5 years, 10 years, 15 years, and so on, and at the end of that time period, if there's a note still owed on that house, if you go away and the family is left over and that home is sold, your money went down the drain.
True.
Okay? You literally should have just woke up every day, got paid, and just gave your money away to the first person that you saw. It makes no sense to me.
Right.
I don't get it. And I don't know what people like how we talked about ignorance early on. People think I'm trying to sell them. So I can't get rich off of a $50 policy.
Exactly.
It's $50 a month.
Right.
Like the average price.
Right. Can that be added to your premium for all of it, or is this a separate?
It's a separate policy. Extra $50 a month. Extra $50 a month. You pay it. Something happens to you, and if I could do this, I always use myself as an example. Last year, my wife had toe surgery. She was out of work for 3 months.
Wow.
We used it.
That's good. That's awesome.
State Farm gave me $1,400 for 3 months.
That's awesome. Yeah.
Okay.
Yeah.
It wasn't the entire mortgage payment, but I used it to pay it.
Right.
You think I cared if my wife would make the work or not? I ain't care.
Right. Yeah.
I pay $30 a month for the thing.
Wow. Oh,
I
that's
pay 30
awesome.
bucks.
I don't think too many people don't know about that. I didn't know about that till just now. That's awesome.
Yeah. She was like, I'm gonna be out of work. I was like, so what? I don't care. I know. I was like, I don't care.
Right.
I made the call like when the first check kicked in. It was like
Exactly.
30-day waiting period. 30-day waiting period. Right after that, Craig is coming. I'm like, okay. It came. I was like, you going back to work?
Right.
I don't care. Yeah, I don't care.
Okay. Well, yeah, we're going to end it on that note. I'm so grateful for you. Thank you for coming on. Thank you for sharing your knowledge.
Please bring me back. Please bring me
will. We have to do this again because I have so many more questions. Please tell people how they can get in touch with you.
You can reach me and my lovely team. We're right here in College Park, Maryland. Like I said before, it's raining today. We're on the campus of the University of Maryland on Baltimore Avenue. We're 2 blocks away from Campus Drive. We're in the College Park Shopping Plaza, right above Chipotle, and there's a Five Guys, 7338 Baltimore Avenue, Suite 208. Craig Adams, I'm your State Farm agent. I'd love to help you insure your home, your automobile, life insurance, health insurance. We even have bank products. People don't know that either. So if you need someone to help you, I'm always here, ready, willing, and able to help.
Yes. All right. So yeah, Craig's page is tagged on this, or will be tagged on this video. So if you want to go to any of these social media platforms, you can click on it to take you right to his Facebook page. You can reach out to him. You can go to his office. He has a physical office there. If you want to reach me, you have my cell 301-326-7555. If you want to start an application, it's www.approvemesandra.com. All of these videos will be found at www.sandraspeaks.com. And we have all the information you need. Give us a call. I'll connect you with Craig when we get started. So thank you guys for tuning in. I appreciate you. Enjoy the rest of your day.
All right. Thank you, Sandra. Appreciate you.
No problem. Thanks.
All right. Bye-bye.